Many of you have asked me a lot of burning questions, and I think it's time for me to answer all your questions today. Hi everyone, I'm Melvin from BizSquare, and here I'm going to share with all of you the difference between a bank loan and a HDB loan. So what is a bank mortgage loan? Bank mortgage loan is basically a loan that is offered by our financial institutions regulated by the MES. The interest rates typically range from 1% to 2.5% depending on the market. The LTV is up to 75% and the down payment is from 25% onwards, comprised of at least 5% of cash. What is a HDB loan? HDB loan is a loan offered by Housing Development Board and is applicable for the purchase of HDB flats only. The interest rate of HDB loan is at 2.6% and the LTV is up to 90%, which means that you can down pay as little as 10% with full amount payable by CPF using the HDB loan. Loan amount differs based on buyer's age, monthly income, and also the financial situation of the buyer. Who is eligible for HDB loan? One of the buyer must be at least a Singapore citizen. The monthly income ceiling for family is 14,000. For extended family is 21,000, and for single would be 7,000. Another point to take note is that you cannot own any private property, and you also cannot own more than one commercial or industrial at this point of time when you apply for HDB loan. At the same time, there will be only two chances of you applying for HDB loan. If you have applied twice before, you cannot apply anymore. Other than knowing the HDB loan, we are here to also share with you more about the pros and cons of bank loan. The pros is that it is easier to meet the criteria as there are fewer criteria to be met. The interest rates are also more affordable and flexible. You are able to refinance at a more competitive rate every 2 to 3 years, depends on your plan. So what are the cons of bank mortgage loan? You cannot pay early or there will be a penalty incurred. If you take a floating rate, the bank floating rate are affected by the economy, so you might be facing a higher rate. The down payment is higher because the LTV are typically lower, and you are also not allowed to change to a HDB loan after you have taken a bank loan. So I'm going to share the pros and cons of HDB loan. For HDB loan, we will pay a lower down payment amount as low as 10%, which comprise of CPF, housing grant, or cash. You will also pay a fixed interest rate of 2.6%. You also have the ability to convert to a bank loan anytime you want with no lock-in period. And if you have the cash to pay off early, you are able to pay off early to reduce the interest cost at any time. So the cons will be paying a higher interest rate compared to the bank because the HDB loan is always fixed at 2.6% per annum. So enough of the pros and cons of HDB loans and bank loans. So here are the summary of the HDB loans and bank loans in a nutshell. The main difference between the bank mortgage loan and HDB loan would be the bank loan is usually applicable for all private residential property and also HDB flats, whereas the HDB loan is only applicable for HDB flats. For bank mortgage loan, you need to have good financial health, good credit score in order to get the loan approved. Whereas for HDB loan, one of the buyer must be a Singapore citizen, and there is a monthly income ceiling, and also you cannot own any private property, and you can only apply for a HDB loan 2 times in your entire life. The down payment wise, for bank mortgage loan, you need to fork up at least 25% of cash payment for the bank loan. Whereas for HDB loan, you can fork out as little as 10%, which can be also paid through CPF. For the loan amount for bank mortgage loan, they will grant up to 75% of the purchase price, whereas for HDB loan, they will grant up to 90% of the purchase price. For interest rate of bank mortgage loan, it is typically fluctuating between 1 to 2.5% per annum, and you are able to refinance at a competitive rate. Whereas for HDB loan, it is always fixed at 2.6% per annum. So in a nutshell, I would say whether is it a HDB loan or whether it's a bank loan, it really depends on your personal needs and your personal situation, right? So I would say if you are a person who have enough savings and you would like to save some interest, and definitely a bank loan will be more suitable, because for a bank loan, right, you can actually pay a lower interest cost. However, you actually pay a slightly higher down payment. Whereas for HDB loan are more suitable for like young couples who have lesser cash savings and you would like to use more CPF to pay your down payment, and definitely you want a roof above your head, right? So a HDB loan is more suitable for a young couple, or else if you are looking to actually save more interest, then a bank loan will be more suitable for you. So thank you very much for watching my content today, and I hope you guys learned something today, and stay tuned for the next episode of Ask BizSquare. So do subscribe for more videos. Thank you. Bye.